The Nasdaq 100 closed last week just above key resistance of 10,970 that we pointed out in the last video. With price closing above it, that set up for a higher open, and price remained above this key trend line in the early part of this week, acting as support. It wasn't until Tuesday where price made the break higher, touching the next level up at 11,180. With expectations of inflation easing, which came out on Thursday this week, traders began to price this in, and it was tech stocks that really benefited, and you can see that within this heat map. The mega cap tech stocks, which got beaten up last year, are the ones that bounced back sharply this week, which pushed the Nasdaq 100 higher. You can see from this chart, the Swiss National Bank has seen its own balance sheet tumble, along with the FANG stocks, suggesting the central bank has been a big buyer of these stocks over the last few years. Back to the Nasdaq 100, Wednesday saw price tag the 11,180 support level before breaking higher. This was basically the market saying tomorrow's inflation report would show inflation cooling off. And sure enough, inflation did cool off, coming in line with expectations at 6.5% year on year and a monthly drop of 0.1%. Notice you didn't get a big move either way on the day inflation numbers came out, as the 6.5% inflation figure was already priced in, being the median estimate. Friday was the start of earnings season with 4 big banks reporting. With 2 big banks, whilst topping earnings estimates, both banks warned of a mild recession this year. Citigroup had a record quarter in fixed income trading, but also warned of tougher times ahead, whilst Wells Fargo missed on earnings and underperformed. Going back to the daily chart, 11,480 will cap any gains, as that will be the next major hurdle for bulls. Get above that and price heads to 11,680 to 90, with the 200-day above that at 11,855. On the downside, 11,180 will now act as firm support, followed by the 11K mark, where price broke above at the end of last week. This is going to come down to the tech earnings in the next couple of weeks in terms of which way the market breaks, because inflation and rates now seem to have a clear direction, which is down. Just look at the 10-year yield. It continues to head lower. Whilst the Fed tries to talk up rate hikes, the bond market just doesn't believe it anymore. Next week, earnings are in full flow with 2 more big banks, Goldman's and Morgan Stanley, reporting, whilst the first big tech name, Netflix, reports on Thursday. That'll be the focus, along with producer prices on Wednesday. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content, and I'll see you at the next one.